Next time you want to loan your Facebook friends may be more important than the papers you give to the bank. Social Network filed for a new patent that would allow creditors to assess your credit worthiness based on the credit ratings of the people in your social network. John Alzheimer is with me now. He is CreditSesame.com president of consumer education. John, first and foremost, what do you make of this idea? What if I was a musician in my former career? Now I'm an investment banker. But if my creative friends are still broke, I'm penalized?
Well, the challenge that you face is that there's this hypothesis in the world of social media / risk management that birds of a feather tend to flock together. And if you have a large or disproportionate number of friends or connections on social media that indicate that they are high risk, then the likelihood of you being high risk, again, in their hypothesis, is going to be much more likely. And therefore, they may actually consider that when determining whether or not to do business with you and under what terms.
All right, but maybe times have changed, right? And I want to play for you, John. We had Max Levchin as a guest. He is a co-founder of PayPal. Here's what he told me about the new credit environment.
FICO Score works fairly well for established consumers of financial products, but if you're a young person fresh off the college bench, you're about to move tax brackets most likely, and the FICO Score looks back and says, well, just hold it up there.
So in essence, we know that Max Levchin with Affirm is actually loaning money to people with computer science degrees and other indicators that even if they don't have money at that time, they will have it.
Yeah, that's right. And it's a very good point. And the CFPB defines those people as the invisibles, meaning that they don't have any sort of established credit history other than probably some student loans and maybe some collections from their former apartment complexes. And it's true that credit scoring systems are much more effective when you have a long history, a robust credit history to look back on to determine whether or not you're going to be a subsequent risk going forward. And the smaller your credit report, and even if you have no credit report, lenders still want to do business with you. And so that's when they're going to start looking for these secondary and tertiary types of data sources to determine whether or not to do business. Look, your Facebook score is never going to replace your Equifax credit report and your Vantage score and your FICO score and your TransUnion credit report. It simply isn't going to do it. But where it can be very effective is for example, my niece, who is about to graduate from school, probably has very little credit history and is going to want to lease an apartment, is going to want to buy a car, is going to want to buy a house someday. And to penalize her because she has no robust credit history without perhaps looking at how quality her connections are on Facebook seems to be a little bit unfair and actually could work in someone's favor. This isn't always going to work against somebody. It can actually work in your favor in many instances.
All right, John, great to have you with us. I should mention as well, Facebook, other big tech companies, they file for patents that they don't use. Maybe this is just filing to file it.